insurance hates water.
Yeah, it destroys things really fast, and it's horrible to deal with. And you know who really hates water? I do. I mean, I like drinking it. I hate it almost in every other. I hate it in my home. I hate it by my stuff. It just destroys stuff.
Yeah, because if you want to see right now with insurance companies, they're finding we've been able to bring some on if they've had a water claim period in the past. Some insurance companies will not take them.
Yeah.
So insurance hates water.
Service line, $10,000 each occurrence.
That main line that comes in and out of your house, you keep getting those letters from saying that it's kind of like a no man's land. City doesn't want to take care of it. You don't want to take care of it. It's the main line coming in. It's coverage on that.
So if like I actually had this and I just replaced it myself. I dug up my own front yard and replaced my service line. My buddy's a plumber. My other buddy has a backhoe. You know, it helps to know people.
Yeah.
We knocked this out. But if I didn't have, if I hadn't have grown up on a farm and I wasn't over eager to run equipment every once in a while, I could have had, $10,000 of coverage to go out and replace that main line out to the street with the exception that it's still going to have a $1,500 deductible in the case of this quote. So like really $8,500 of coverage. Had, they needed to bring out some big equipment. I pay a contractor and all this stuff. And then it would have still, if it had backed up, covered replacing $25,000 worth of baseboards and floors and paint and stuff in the home, right? And $5,000 worth of laptops that got ruined on the floor, or clothes that are real crappy now, clothes, or whatever, right? Okay. A $2,500 limit applies to service lines 50 years or older. So if you have an older home, be aware that insurance companies are pretty well aware that your service lines suck and you have a higher probability of having an issue. So it goes back to, again, low probability, high impact, low probability. And they're saying, hey buddy, more than 50 years old, that the materials were different back then. It's been a long time. Roots grow into stuff. Things break down.
Yep.
We're creeping back up into, reasonable probability. And so, rather than increasing the rates, we're going to just decrease our liability. We're going to give you less insurance.
Yep.
Okay. So be aware of that. Okay. We're moving down to, farm, ranch, and personal umbrella coverages.
Yeah.
Umbrella policies is what most people are going to know these as umbrella policies.
Yep.
You have, 2 parts on this: protection for personal vehicle and or business liability, and then protection for personal liability and or farm ranch liability, right?
Yeah.
At the end of the day, what it is it's each occurrence with an umbrella aggregate of $1 million is what's on this quote. And so what does that cover? Why does somebody need $1 million policy?
So
that sounds like a lot of money, a lot of coverage. It doesn't look very expensive on this quote. Why do you get all of a sudden you get all this coverage? It's not a lot of money though. What the heck is it covering?
So on those umbrella coverages, when we're talking about, like you were talking about term life insurance, where you can get a lot of coverage for a little bit of amount of money, this is where we start getting into where if you meet the minimal limits of liability on your vehicles, on your home, a cheapest way to get a bunch of insurance that's on top of that is to add an umbrella. But everything that you own has to meet those limits of liability. They get very picky on this. You can't just have different cars at different limits of liability. And so for ours, 300 combined CSL is going to be your lowest that you can get. So $300,000 for the accident, but then if we add an umbrella on that, we're looking at $1.3 million. So once those limits of liability run out, now we have $1 million on top of that, and that goes for your liability limits on your home as well.
So if we go back to like the scenario like we talked about earlier, right? God forbid you rear end and drive over the top of a Lamborghini with a big truck. Okay, people are going to be hurt. You're going to have damaged. Right? If you go back to the property damage, all you had liability for was $100,000 for the property damage. That's a $200,000 car. and bodily injury, $250,000 per person. Say there's two people in the car. All of a sudden there's $1 million in medical bills, right? So you're at $1.1 million. So you would have to pay, right? So like if you don't have an umbrella policy, they'd say, hey, we'll pay the $500,000 in medical bills. We'll pay the $100,000 in the property damage. You're on the hook for the rest, dude. Yeah,
and especially if you have it.
And that's not. Do you have that in the checking account? Right. There's attorneys that are going to look at you, and again, it all goes back to profiling. Huh? It largely goes back to profile. There's attorneys that specialize in looking at, okay, where do you work? What kind of income do you make? Can we garnish wages for the rest of your life? Do you own a home?
Retirements?
How much? Yeah. Do you have that retirement account? Do you have, how much home equity do you have in there? You got cars that could get sold. Do you have, you got collectibles, there's all right. Do you come from a family with money that you might receive an inheritance later on, and they're going to sue you all the way through that inheritance?
Yep.
And make sure, and the longer those lawsuits go on, the potentially more you're taking on, because at the end of the day, you're going to end up potentially owing legal bills on top of all this that you're liable for.
And with today's day and age, we've had a friend, wasn't a client of mine at the time, got in an accident. Everybody walked away. Zero. Nobody went in an ambulance. They found out who he was, magically over $140,000 worth of bodily injury. Yeah. And his limits did not cover that.
Yeah.
So they went after it because they found out he had money. So that lawyer got it. He's got money. We have a case.
Yeah. One of the easiest ways to avoid getting sued is not letting people know what you always have. But one of the next best things you can do is get an umbrella policy, in my opinion. And the reason why is because if somebody makes a $1.1 million claim and you have now effectively $1.3 million worth of coverage, right? Your insurance company is going to fight the whole battle and absorb all those legal costs and deal with all the headache, because they're trying to defend how much they have to pay out. They've agreed to take that liability. This is the effective use of insurance, right? The effective use of insurance is not for, I was trying to drink my morning coffee and accidentally hit a fire hydrant, and now I got to fix my car and it's ruined my day. That's not what insurance is for. It's kind of your fault. And so you're making not a good trade because it was something that's like avoidable, and you shouldn't have run into a fire hydrant. Okay. What is a really good use is, I heard of an example in our town a couple of years ago. A kid dove into a pool head first, and there was something down at the bottom of the pool, and it basically mutilated a child's face. And again, if you look back at the base policies on
$300,000,
which this quote I had generated, it said give me good coverages, right? Yeah. $300,000. This kid's medical bills were over $900,000. So had that family not have the umbrella policy to help cover that, their friends, in order to save themselves, would have had to sue their other friends, right, out of their home.
Yeah.
Potentially. It is not a fun situation. So
if somebody's out there listening right now and you have a pool at your house and you don't know if you have an umbrella policy, call your agent.
I would say umbrella policy. Sometimes people ask me like, well, when should I get an umbrella policy? Okay. I am basically, my whole philosophy, if I buy the right insurance, if I do the right things and I manage risk the right way, it allows me to be really risky in other parts of my financial life, right? So I can make riskier investments that hopefully generate more reward, right? Like that's me personally. I'm not recommending everyone do this. So when I'm talking through it with people though, one of the things I'm trying to identify is like, okay, do you have assets, and how easy would it be for you to go over the limits? If you already bought the most amount of insurance you can buy, it's like, do you live in a community? Are you out in the middle of nowhere in Kentucky that's really rural and not a lot of really nice vehicles? Or do you live in, Long Beach where everything's $100,000 vehicle, right? Yeah. Like, we're in St. George. There's a reasonable probability that there's not a shortage of really nice cars driving around in Southern Utah. So if you drive a big vehicle and you own a home, I think that's a trigger for a good consideration. These are all things that should make you want to consider an umbrella policy, right? Like just think this through, call your agent, have a conversation. Drive a big truck. You have recreational vehicles, dirt bikes, boats. If you have a trampoline, if you have a pool, if you have a reasonable retirement account, right?
Yeah.
Pretty much like once you get to the point where you're like, hey, I'm going to actually plan for retirement. I'm starting to make headwind. Umbrella policy.
Yeah.
Okay.
If you have extra spending money for something, you need to cover it.